Will the Trump trade deal push the market higher? Why can't Labor just support the mortgage brokers? I thought they didn't like the big banks, and then reporting season is really hotting up. Coles, BHP and WOW. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Okay, Paul, let's talk about the Trump trade deal. The market's kind of telling us it's going to happen.
Yeah, look, it looks like it will happen, at least if we don't get it by the end of February, they'll just delay it. I think the question, Peter, is has the market already bought the good news? And what happens when this trade deal finally happens? Are we going to get a rally after that? I'm starting to think that a lot of this is, in the US at least, is being priced in.
Yeah, because I think they're about 18 or 19%. And at their worst, they went down 19.5%. So a lot of this stuff has been baked in. But Paul, part of this big rise is the fact that the Fed says they're on the sidelines. So maybe there's another 3 or 4 or 5% left.
And maybe the Fed is actually a bigger reason than the Trump trade deal for why the US market has rallied. Yeah. And I guess partly, you look at the Australian market, it's done rather well as well. And I guess it's all because there's just so much cash around. The bears who were calling doom and gloom in November and December, and there were lots out there saying this was bear market, have got it wrong. A lot of the fund managers have got a big egg on their face. And I've been a bit surprised, but just yesterday after a fairly ordinary set of profit results, the market went up. Yeah. So I guess that shows you there's still some underlying buying there, and and I think the question now comes, Peter, when we do get the good news about trade, what's going to happen? Yeah,
but the bottom line is, where do you put your money, Paul? Like, term deposits are really, really low interest rates. So, and these companies have been sold off, so it's a good time to buy back in because they're relatively cheap. Okay, your returns aren't going to be great, but they're going to be better than 2.5% or 3%.
And that's what I've argued all along about the banks. I mean, the banks, we know there's no growth. We know that NIM is pretty flat, volumes are flat. It's really an expense game. But, when you've got yields still at 6-7%, cash is 1.5%. Term deposits are coming down. The outlook is for, if not lower rates, at least rates going nowhere.
They're like infrastructure stocks now, aren't they?
They almost come back to being a bit like an annuity stock, and I think that's what we've seen. So why the banks probably haven't done better is because we are seeing this divergence. When the resources rally, generally the banks get sold off and vice versa. Resources have done really well on the back of the unfortunate disaster in Brazil, which is really just the last part of it. But, people will come back for yield, and that's why the banks went up yesterday.
Okay, our bell ringer's gone missing in action, so we'll just go to the next one. Paul, I just can't work this out. Like, Bill Shorten's a mile ahead, well, he's losing his lead, but he's still a mile ahead. He's never ever liked the big banks. Why would he just come out and simply say, we will support the mortgage brokers? Like, he's not suggesting that he has to believe everything that Ken Hayne said.
No, Ken Hayne, look, they're a bunch of lawyers, right? Lawyers often get these things wrong, and Ken Hayne and his team got the whole mortgage broker thing fundamentally wrong. They think the user is going to pay, that consumers are suddenly going to front up and pay $3,000-$4,000 to go to a mortgage broker.
Not in my lifetime.
It won't happen. We don't like paying up front. That's why commissions have existed. Now, I'm not suggesting a commission-based industry, but if you want to have competition in the market, you want to support the smaller banks and all the other credit unions, you want to make sure the big banks stay honest, you need some sort of intermediation between the bank and the borrower. Yeah. Someone's got to get paid, and you can't do that unless you're getting paid for it.
And the thing is this, Paul...
Billy Short needs to come out and do it and says, look, we hear what Haynes said. Yeah. Maybe look...
And we respect him on 70 years, but this one's a dumb one.
Right, but let's actually work out the best solution. We don't think he's actually on the ball with this.
No, exactly right. And look, the bottom line, I think, is... I had Mark Burris on my TV show on Monday, and he just actually said ME Bank, or Me Bank, whatever you want to call it, which of course is linked to the industry super funds, which is linked to the trade union movement, which is linked to the Labor Party. ME Bank puts out a hell of a lot of loans via mortgage brokers. So, like, come on, this is just crazy.
I have to say, I wrote a brilliant article on this last week, Peter, one of your lines, and you can see that as to why Billy Shorten was wrong on this and needs to get on board. I mean, it's not a hard thing. There are a lot of ways this can be done, but remember, the big banks want to see the death of mortgage brokers, right? Yeah. So if you're a little bit anti-bank, this is a great boon to bank shareholders, underappreciated in the market. So they need to rethink this a little bit.
And the really important point is this. If Bill's going to be Prime Minister, I want him to have the brains to back off when he's done something wrong. Peter Beattie was a great leader because every time he got something wrong, he would say, hey, I got this wrong. And he got away with it for a damn long time because people said, well, people do get things wrong. So, Bill, grow up and become a proper leader. Okay, finally, reporting season. Coles, BHP, and I said WOW, just in case you don't know, Woolworths ticker code is WOW. Paul.
Yeah, look, a big day in reporting season, probably the biggest of the season. The big news out this morning, no real surprise here, is that Woolworths has come back to the lead in the supermarket wars. Same store quarterly sales up 2.7% in the quarter versus 1.5% for Coles. Yeah. It was just that little mini creatures thing that Coles got a lift in the plastic bags. But Woolworths has said that by and large, it's got $1.7 billion to return to shareholders following the final tick-off on the petrol sale, and that's going to come back via an off-market buyback. They haven't actually announced it, but if you read the report, it says that's the most likely way it's going to be distributed. I always said we're going to see more companies do special dividends and off-market buybacks while there's franking credit changes out there. This is good news for shareholders. It's partly in the share price.
If you bought shares today, would you be a part of the buyback?
I wouldn't be selling my Woolworths shares. I mean, I don't think that there's not a lot of great news in these reports. Supermarkets are doing it really tough still, right? You know, earnings growth is negligible. Coles negative earnings growth. Woolworths is up by 1%. They're not big earners. The competition in this market is not going away, but shareholders are going to get a capital return. Moving on to BHP. Look, I think that was a little disappointing last night, but you know, mainly because it's so hard. The productivity is not coming through. You know, all the hard work in BHP has been done. They say they're going to get better in the second half. They've had a few accidents in the first half. Look, BHP is probably seen is in the
close to the top. You reckon?
Close to the top. Look, the last little rally has come mainly because of the tragedy in Brazil. Not calling the death of iron ore prices, but I don't think there's too much better news to come out of it.
It's become a bit like an infrastructure stock as well at the moment.
It's a bit like an infrastructure stock. They're doing the right thing. Unfortunately, they haven't done any crazy things. They haven't bought much yet. And then that'll be the death of BHP when they start buying new assets.
Okay, let's go to Coles, because they reported yesterday. What did you think?
Underwhelming. Look, Coles, buy at $11, sell in the high 12s. Set that all along. I'll write about that in the Switzer Daily tomorrow.
Can't wait.
Look, they are going to struggle. It's just that... supermarket business is tough, costs are going up, earnings are under pressure, and look, there's no good news in the Coles report, and I don't know why people were expecting much better. So, look, a good little earner, but it's a tough game, supermarkets, and they're not growth businesses.
A quick finish off, but Paul, despite the fact that reporting season hasn't been a killer, positive experience, it's nice to see the market going up.
It is, and that was a surprise, Peter. I said at the outset, I was surprised the market actually went up. We had some pretty ordinary reports. Blackmore's was pretty horrible. Yeah. Cochlear wasn't good. There was no joy in Coles, and the market went up. And it came on a day when there wasn't much of a lead from the US because of the holiday there. So I think our market, certainly like 6,000. The cash is coming in. There's got to be more cash coming out, and there are going to be more off-market buybacks and special dividends paid.
And I do think we still need the trade deal to come through.
We need something, and we need to get through the election cycle, Peter. I think that's the other thing that's holding us back a little bit.
Without doubt. Well, I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.